Hi, this is Sheldon here from the Currency Advisory Desk. Well, the US dollar spot opened today at around 55.70, which is up by 8 paise. And we also saw the dollar index, which is at around 81.53 right now. It's trading down by 0.04 percentage points. Now, yesterday, the US GDP preliminary data came in positive, and the figure was reported at around 1.7%. Also, there was an increase in the pending home sales data, which also came in at around 2.4%. Now, both these positive data are in a way good for the US economy, and this will boost the confidence of US economy. We have the US unemployment claims today, and also the personal spending data, which will be coming up in some few hours. Now, what news we are getting from the US economy is that all this positive data, the reason why it's showing in the green is because of the internal demand that is there. They're saying that the major factor driving the US economy right now is the internal demand. So this is something what we have to monitor as such, and the personal spending data, which is going to be out in some few hours, will get a better you could say view on the economy and the actual drivers of this. This will be verified once we see if the personal spending data is positive. Then we know that yes, it is the internal demand that is driving the US economy. Now, looking at the international markets, we also see that everybody is focused on the Jackson Hole meeting, which is going to be happening tomorrow. However, as discussed earlier, we do not expect any QE related news flow from this particular event. And also we see that there's a lot of the data that's coming out from US, it is on a positive front. So it's a big question mark whether US will actually want to go in for a further QE in a positive environment, which will add on to inflation, which will add on to cost globally. So QE is something which is on the back foot as of now. That's what we expect. The dollar is expected to continue its upwards trend against the rupee, and with our country's GDP, India's GDP figures will be out tomorrow. We expect that the figures will probably not be so good, and also we also feel that the RBI is it's constantly stating that they are not going to go in for any sort of interest cut or any cut in rates. So with these sort of sentiments, this just adds on to our bullish stance for the dollar versus the rupee. Now, there is nothing much happening in the Eurozone besides the usual political dialogues between Merkel, Hollande and the entire Euro politicians and the bureaucrats. Now, we seen yesterday that Draghi came up with some of his statements in the market, which generally have an effect of increasing the euro's value against the other currencies. And yesterday he stated that the Eurozone should look at a fiscal union. Right now they only have a monetary union as such. They should look at strengthening their fiscal strength somewhat in line with what's happening in the USA, as in how the US economy is functioning. They want to have something like that in the Eurozone. Now, this is a far-fetched statement because something like this will definitely hamper the stronger nations from the Eurozone, like Germany, or even the smaller nations like you could say Poland and all will be affected by this. So this is something what is just a political stance, and one more statement coming from Draghi, which is not going to have much impact on the euro. We see that every time Draghi speaks something, the euro tends to rise and it runs up against the other currencies. But I think right now the market is actually understanding that what Draghi is saying is just political gibberish, and it does not have anything to do with with the fundamentals of the euro economy. We see that the euro is expected to follow the dollar rupee trend, and we see it trading between 69.80 to 70 levels domestically. Both the euro and the pound will be taking cues from Jackson Hole and next week's ECB meet, as we know that there's the ECB meet next week, and a German court ruling which will actually inform us about what's going to happen with the ESM, whether it's going to be recognized or not. And we expect a lot of volatility in the coming week in the euro pair internationally, as well as in the domestic euro and rupee pair. Now, there's a lot of Japanese data that's coming out tomorrow, and it ranges from the core CPI to unemployment numbers. We see that in the recent trading sessions, the yen has had a very good run both internationally and domestically, and we expect it to sort of consolidate from here and probably go back to around 79 levels internationally. And if we are looking at our markets, it will go on to around 69.50 to 70.20 levels. Looking at the technical trends for today, Well, the dollar, the support is at 55.55 in spot, and we have a resistance at around 56.43. For the euro, it's 69.62 the support, and the resistance is at around 70.50. And for the pound, we have a support at around 87.86, and we have a resistance at around 88.50. Now for the yen, we have the support at around 70.56, and we have an important resistance at around 71.50. Well, one can go ahead and short the yen because we see a bearish trend forming on the yen rupee pair as such. Well, that's it for today. Thank you.